Good afternoon and welcome to the end of day market review for April 5th, 2012. My name is Jason Waugh, one of the trainers and success coaches here with Ideal Trading Lifestyle. I'm going to be walking us through today's presentation. Now before we get started, we are going to ask that you give this disclaimer that's about to show up. A quick read. Once we are done, we'll go ahead and get started with the agenda. All right, well, first things first, we're going to start things off by taking a look at the daily news. With this, we're just going to see what's been going on a global scale and has been affecting the U.S. markets. We're then going to go ahead and take a look at the market outlook. This will include analysis on the S&P 500, where we'll be looking for support and resistance levels, as well as identify the location of its MACD. We're then going to change charts and take a look at the volatility indicator. With this tool, we'll be able to figure out just how much volatility is in the current marketplace due to the level of fear. Now, the last time I looked, there was one stock on our watch list, so we'll go ahead and take a look at that, though that's liable to change by the time we get to that particular portion of our presentation. There might be more, there might be less, so we will see what ends up happening with that. Now, that will then leave us with just preparing for the long weekend, which really is actually very straightforward for everybody, right across the board, regardless of basic or advanced. The markets are going to be closed for statutory holiday, and as a result, we should all be sitting on cash. And if we've been trading properly, we will be sitting on cash right now as we speak. Obviously, though, if anybody has any questions at the end of the presentation, we will get those answered. All you need to do is raise your hand or send in a message to the chat box. In any event, those questions will be answered at the end of the presentation. All right. So first thing here, let's go ahead and take a look at Yahoo Finance. Now with this, we're just going to see what's been going on and cause the markets to do what they've done. All right. So a little bit of a mixed day. First off, you can see the S&P 500 did end up experiencing the worst week of 2012. That is starting to hold a little bit more weight. We've seen this a few times, but that was during the month of January and even February, where there really wasn't a whole lot to 2012 yet anyways. But certainly now that we're pushing ourselves into our fourth month of 2012, that is a substantial claim. You can see that they were mainly sideways, but with the growing pressure that's been going on with that, the debt crisis in Europe, there's just been some of that concern leaking into the U.S. side. Now, the sector that did well resided within the NASDAQ, as both the Dow Jones and the S&P 500 ended up slightly down. Though if you take a look at the S&P 500, it's only down 0.06%. So not a substantial loss. Oil has regained some of its ground, going up 1.6%, with gold gaining ground and up 1.1%. This was after gold's 3% decline just the other day. All right, let's go ahead and take a look. All right, so right now we've got the S&P 500, and you can just see the 6-month chart here, very bare. What we're going to do is we're going to draw some trend lines just to show you what's been going on. First things first, we're going to go back to December 28th. This has been our starting point for our trend line for quite some time now. And you can see the level of support, which has clearly been broken. Looks like right now the S&P 500 is trying to find some stability at that milestone of 1400. The overhead resistance that we had prior isn't so much of a thing of importance right now, except to just show us where the markets have been and what they've done for quite some time. Very slow trading, consistent gains throughout the months though, but we've definitely had some losses here. Now, if you look back, we had 1 day of loss, followed by uprise in trading. Here we've now had 2 days of losses. So this is the first time that we've seen this type of decline. Now it's also important to note that our MACD is declining bullish, black line down below the blue line. If things go nasty, 1 more day, there's a good chance that we're going to see the MACD work itself into bearish territory. We've been expecting this though. As you can see, the price has been rising, but the MACD has been gradually getting lower, showing a MACD divergence, which is an early signal that the markets could be turning around. All right, let's change gears here. Take a look at our volatility indicator. Volatility indicator, VIX.X, is currently at 16.70. So it's gone up about 2 points since the earlier portion of the last week, and starting to show that there is a lot more people thinking about selling their positions and sitting on the sidelines. So we do need to see and be aware that there is a slight increase in volatility. Whether or not this is going to ramp up and push us up above 20 is going to be a different question all of its own. If it does, that's when we really need to start looking at changing our overall game plan with smaller profit targets and quicker gains, smaller position sizes as well. We won't necessarily be expecting to be reaching new cycle highs every week like we have up until now. All right, looking at our watch list, it looks like we have now got nothing on our watch list. But again, just as well, there's nothing that we would be trading anyways because of the statutory holidays. So with that said, that will conclude our analysis. We just need to see if anybody's got any questions, and we will call it a day. Let's take a look here. All right, well, it looks like everybody's good. All right, well, as always, I'd like to thank you guys for attending today's presentation for Thursday, April 5th, 2012. We will touch base again on Tuesday. Ciao for now.